Bitcoin closed November at 90,000, and that's minus 30% from the all-time high. A big dip, and the 100K support level didn't hold. So let's see what's going on. This first chart, we'll see the stock to flow level of 500,000, Bitcoin at 90,000, and the realized price in the moving average at 56,000. RSI, the color, the relative strength index, is at 55, green. So the big question is, are we going to see a bull market ahead or a bear market? And we are getting mixed signals. So the RSI at 55 is saying bear. The 4-year cycle, being 1.5 years after the halving, is also saying bear. On the other hand, stock to flow, the valuation says bull ahead, and the moving average realized price also point to a bull market. So let's dive right into that. So let's go to RSI first. RSI, it's at 55. That's a big dip from 65, but it's still in an uptrend. It's above 50. Everything above 50 is uptrend. Everything below 50 is a downtrend. So it's not overbought, the red area. It's also not oversold. It's a bit in the middle, but it's still a big dip. And last video, I said that I would be worried if the RSI dips to 55. Well, we are at that point right now. So in my opinion, there are 3 scenarios from here. First scenario, like 2014, we'll have a bear market. Or 2018, when it was at 55 as well, bear market followed. Or 2022, RSI was at 55 and a bear market followed. That means a minus 50% drop from here to below the 50,000 level. That's what this could mean in scenario 1. Scenario 2 is that it's like 2019. So we had a sort of pre-bull market, a fake bull market, and then it dipped back to below 55, and then the real bull market started. So it could be like that. This could be the fake bull market, the pre-bull market with the euphoria around ETFs and the election of Donald Trump and the end of the war on crypto by the Democrats. But yeah, that's scenario 2. And that would mean that the next step would be a bull market. So after the blue, we had this fake bull market, bear market. Now we get the real bull market, the red. Now the third scenario is that this time is different. That this time the range of the RSI will be between 75 and 55. It will stay there. It will stay like this. And we will see no more red and no more blue. Which scenario we will see, I don't know. But I lean towards scenario 3, this new normal range of the RSI. And the reason that I think that is we're seeing a lot of institutional investors entering the market, and they invest different than retail. Retail would invest or try at least to invest at the low end of the market, and then maybe sell at the high end of the market, and then make a profit, and then wait until the bear market is there again. That would be a typical retail mindset. An institutional investor thinks differently. They think in terms of exposure. So they'll say, okay, we have a mixed portfolio of some shares, some bonds, and we'd like some Bitcoin in there, and we'd like an exposure of, say, 1% or 2%, whatever. Now, what happens if you invest like that? It means that if Bitcoin goes up a lot, so there's a big bear market or bull market, Bitcoin goes up, then the institutional investor has to sell, because the 1% exposure that he wants will be more than 1% if Bitcoin rises more than the other assets, it will be 2% or 3%, and then the institutional investor has to rebalance. It has to sell when Bitcoin rises. On the other hand, it has to buy when Bitcoin drops in value, because the 1% will be 0.5%, for example, and then has to be rebalanced towards that 1% of the portfolio. So the institutional investor has to buy when Bitcoin drops. And that could keep Bitcoin in this very tight range around the trend. And I don't know for sure, of course, but I have a feeling that this is exactly the kind of dynamics that's going on right now. Okay, moving average and realized price. Those are the black and gray lines here. They're both at 56 right now, and they're very close together for almost a year. Very much like 2020 and 2016. Also, RSI was green back in those days. So that's very interesting to see. And the moving average and realized prices are indicators for a bottom of the bear market, like here in 2022, the blue, here in 2018-19, and in 2015. The bottom of the bear market was at the level of the moving average or at the level of the realized price. It's now at 56. Remember that. Now, in a bull market, the realized price, gray line, will diverge from the moving average, the black line. It happened in every major bull market. And in my opinion, we will see a divergence if a real bull market starts, or when a real bull market starts. I don't know. So what I do know is that we have not seen divergence yet. So in my opinion, there has not been a real bull market yet. It has yet to start. Anyway, stock to flow. Stock to flow, that's the gray line, right? The gray line, it's this formula. It's based on scarcity. It's basically a thesis that value is based on scarcity. And it says something like Bitcoin is scarcer than gold, so the market cap of Bitcoin should be higher than the market cap of gold. By the way, if you have not read the articles about stock to flow, they're from 2019. That's this area. They're all on my website, planbtc.com. Articles are there, the data is also there, and real-time charts and all. So please take a look. Stock to flow is a fundamental view. It says what Bitcoin should be worth, not what it is worth. So right now it points to a large undervaluation of Bitcoin. Bitcoin is really undervalued. Of course, it's very rough. It's very rough because it's only based on one parameter, one variable, the scarcity, and it's really a linear regression. So it's best to use a range. I use a range of 250,000 right now and 1 million. It's even the lower range of 250,000 is, of course, more than 2.5 times the price level that we are right now. So it's still a big jump. And by the way, Bitcoin stock to flow says nothing about the tops or the bottoms. It doesn't say when they are. It doesn't say how high or how low they are. It's just an average over that 4-year period. So the fact that we should be at a market top at an all-time high right now, 1.5 years after the halving, that's merely a historical fact than that it follows from this regression model, this stock to flow model. Also, some people say the model is broken, invalidated, but I guess that's to be seen. It's too early to tell. We can say that in 2028. I remember very well that I published this stock to flow model here at the bottom of the bear market. People said I was crazy. Then we had some pump, but right here, people got frustrated and said, well, the model doesn't work, it's broken, it's invalidated, and see, nothing is going on. And then when everybody was about to give up on the model, then it finally pumped towards this predicted model values and Bitcoin values. So I'm seeing the same right now. A lot of people think it's invalidated, they say it's broken, they're frustrated that it's not already at the 500K or at least 250K level. But it's to be seen at 2028. If this straight line here, this growth line, which is almost exponential growth right now for the last couple of years, goes on, it will hit that line in 2027. Anyway, there's also a lot of people that have problems with me talking about prediction. And maybe they're right, prediction has something about a guarantee in it. Of course, there's not. I probably should be better talk about forecasting. That always implies a range forecasting, but forecasting, well, it's not that well understood as prediction. And I don't know what it really is or how you should look at it. Maybe you should look at it as my opinion, if you will. And originally, when I published the article, I was talking about a thesis. The thesis is that scarcity drives value, that value is caused by scarcity, and, well, that's a thesis that's yet to be tested. And as always, all models are wrong, and some are useful. Do your own research, and see you next time.